Hi everyone, I'm Raul Harad, CEO of DeepSafe, with another stream. Today I wanted to talk to you guys about something that is actually relevant, I think, to all of us, but particularly in the Web3 space when it comes to cryptocurrencies, when it comes to the movement of assets, digital assets. And so I wanted to talk to you guys about navigating crypto regulation. So, what are the global trends? What are the compliance solutions? And what could be the future hurdles? So, as you know, global cryptocurrency regulation in 2025 is marked by rapidly evolving, however, regionally distinct frameworks, and that they all aim to harmonize oversight and balance innovation and security. And compliance solutions are advancing through the adoption of AI. And future regulatory hurdles revolve around technological novelty, cross-border complexities, and the escalating scale of digital finance. So when we talk about global regulatory trends, this is a place where we've seen a lot of evolution. We've seen a lot of governments come out with either established regulations or with projects, bills that are expected to become laws. We've seen a lot of adoption, let's say, in the system through the ETFs of Ethereum and Solana, which are, a big milestone, I would say, for the crypto business in the sense that just as how, we had Bitcoin ETFs approved a few years ago, and that was very much a way to legitimize Bitcoin. Now we have that for Ethereum and Solana. And in general, a lot of these laws or bills are comprehensive but flexible. So in the US, they're integrating digital assets into a broader financial regulation with sharper guidance and steps towards responsible innovation. They've approved laws that make it so that certain crypto operations have more clarity in terms of what they are subject to in terms of controls and what they have to do to be compliant. In the European Union, we've seen the Markets and Crypto Assets Regulation, of MiCAR for short, which represents really a major milestone in providing a harmonized framework that promotes legal certainty and encourages global convergence. And you have to keep in mind that having a clear legal framework is actually something that in the industry we all want, right? This is not the early days of Bitcoin when it was kind of the Wild West. Really, we want to use the technology in a way that is compliant with the law in a way where it's done in an organized and um, let's say standardized way because we all win when we have strong standards of compliance. And so it really encourages global convergence, right? And the reason um, the European Union's MyCar is such a big deal is that, obviously in the European Union, we have different countries, and that, um, really helps uh, have a vision of how this decentralized part of the economy could work, despite having, let's say, different central bank policies, having different controls for currencies in terms of the euro and in terms of inflation. So that really is a big deal. In Asia Pacific and Latin America, regions are deploying localized rules. We've seen Singapore introduce very strict KYC or know your customer um, requirements and very granular reporting demands. We've seen other countries, for example, Costa Rica, where I'm from, present quite comprehensive bills that are expected to become laws in the upcoming months. And so we are really seeing a development in Latin America post, let's say, uh, the outliers, which in this case would be Argentina, because of, let's say, the macroeconomic difficulties that they have, Venezuela because of the macro and political situation, and El Salvador because they have adopted obviously Bitcoin as legal tender. So the other countries are also growing, and with that growth has come regulation. So internationally, what we see is a trend towards more a collaborative regulation. We see a lot of these uh, emerging regulations being based on other ones, and so that makes it that they're quite similar and makes it easier to follow them. So in terms of compliance solutions, what we've seen is AI and machine learning now power leading compliance tools, right? So reducing false positives in transactions monitoring and enhancing real-time analytics for AML, which is anti-money laundering, and CFT, which is counter-finance terrorism. So really by having these AI tools that can analyze patterns, that could look for outliers, that can look for potentially suspicious transactions in real time, helps improve real-time compliance, right? The idea with compliance is to move from, you find out about it later, you report it, etc., rather to a place where you real time see where an operation that might be illicit or that might warrant more research or documentation happening in real time, and you can actually stop it from happening. We have notable compliance providers like Elliptic, Chainalysis, Crystal Blockchain, and they provide end-to-end analytics and monitoring services. We have RegTech partnerships that are fostering solutions for multi-jurisdiction compliance. Another important trend that we're seeing and that has developed is the decentralized identity solutions, um, where blockchains analytics are being adopted, and this enables transparent, privacy preserving identity verification and transaction tracing, which obviously is very important. Then the compliance market is really expected to see significant growth, uh, mostly led by the US and Asia Pacific, with cross-border regulatory mapping becoming a business priority. In terms of high-level trends, what we're seeing now, like I said, we're seeing harmonization of AML and CFT regulation. The what we call travel rules. So the AFTF is pushing stronger global anti-money laundering and counterterrorism financing expectations for virtual assets and virtual asset providers, right? With updated guidance to tighten supervision and travel rule compliance. We're seeing regional rule books arriving and using mostly MICA, which is the European Union's regulation as a template. And as I mentioned, this is really good because then you have laws that are quite similar in different jurisdictions, and it makes it easier to kind of have that continuity in the case, which happens a lot with crypto. Obviously, that is cross-border in terms of international borders. Also, MICA has a framework that establishes um, the most complete, let's say, single market rules for issuers, for stable coins, for service providers. So it is really a good basis for the other jurisdictions to be using as a, let's say, template for their rules. US policy is shifting. Enforcement, however, is a bit uneven. We've seen agencies that have changed, let's say, high profile cases have been dropped or changed direction. Uh, the SEC and the CFTC, Treasury and banking regulations are each pursue different priorities. And so this is creating a bit of confusion in the US um, because they have competing agendas. And so while they're being, let's say, a bit more laxed or a bit more understanding in terms of having more comprehensive regulation rather than, let's say, coming down hard on the big players, because there are so many regulatory agencies that are involved, you have competing agendas. And so enforcement, unfortunately, hasn't been, let's say, standard. Then we have, of course, the focus on consumer protection, custody, and transparency. And so this is obviously very big. Regulators globally are prioritizing custody standards, reserve attestation for stablecoins, clear token classification. So, is your token a utility token? Is it a commodity token? Is it a security, right? Market integration controls. And so we're looking really at um, a focus on consumers as it should be. In terms of practical compliance solutions, there are quite a few, let's say, technical and governance capabilities that are being deployed. We have a Know Your Customer slash AML tooling, which is helping to not only do the AML case management workflows and the identity verification, but also remaining as a first line of defense for things like monitoring politically exposed persons or sanctions that need to be continuously screened. We have travel rule and VASP connectivity, so VASP being virtual asset service provider, which I mentioned before. We have on-chain analytics and transaction monitoring. As I mentioned, this is a big one because with the tools that we have now with AI, we have the capacity to really enhance what we know as, let's say, compliance or in terms of um, oversight, right? Real-time oversight. And really that's what we want to get to is uh, stopping, as I mentioned before, transactions that seem illicit before they even happen, right? So it's a matter of instead of investigating a crime that already happened, is stopping a crime that is about to and hasn't happened yet. We've seen developments in custody, insurance, and proof of reserve. As I mentioned, there is now more institutional custody arrangements with audited proofs and insurance products. For stable coins, we have more on-chain reserve disclosures, and third-party attestations are becoming mandatory in many areas. Again, this is within MiCA, the European Union regulation. We're looking at RegTech and automated reporting, which again is a big one. Legal structuring and licensing. So in terms of entity structuring, to separate token issuance, custody, and trading activities. So this is important in terms of the different sorts of licensing that these service providers need. And then we're seeing, of course, DeFi risk controls. So for teams exposed to DeFi, we have smart contract audits, we have Oracle monitoring, we have circuit breakers, on-chain limits, tailored KYC for on and off ramps when possible. And so we're really looking at um, controls that are adequate for the technology that we have. In terms of near and medium trend hurdles, of course, we have the cross-border fragmentation, as I mentioned. Different countries have different regulation. Again, the great thing is a lot of them are using the EU's MiCA as standard, but it does remain as a difference, let's say, between some jurisdictions. We're looking at DeFi non-custodial services. So this helps apply the KYC and AML rules to smart contracts and permissionless protocols, which is legally and technically very hard to do. Privacy versus surveillance tensions. So, of course, when we're looking at keeping a close eye on things, we're also losing privacy, and part of the premise of decentralization is privacy. And so, obviously, this is something that needs to be balanced. We're looking at stable coin systemic risk and reserve transparency, which again is a lot of the controls that we need to make sure that large stable coins blur payments and monetary policy. So we need to make sure that there's a real-time and auditable reserves without leaking sensitive commercial information, and that's still difficult to do. We have the capacity and talent gap for regulators. This is an important one because we have a fast evolving technology, and in some cases, really, the regulators don't have the knowledge, the talent, the people that can understand the technology well enough, not only in terms of the enforcement, but also in having the foresight of what could be coming next. In terms of actionable checklists, for compliance, legal groups, product teams, number one is map your regulatory footprint, list your jurisdictions you touch, and also things like users, liquidity, banking rails, look at the applicable regimes and what obligations you have, classify tokens and exposure. So, it is likely that token classification is going to become a thing. And so making sure that the downstream license registration implications that come later are easier to deal with. Implement a travel rule roadmap. So if you move value across wallets or exchanges, deploy a travel rule messaging stack and interop with counterparties. Look at adopting enterprise on-chain analytics. This is important again, just to make sure that you keep the appropriate real-time controls. Strengthen custody and reserve practices. This is something that will be again regulated, so just make sure that you have, the proper institutional custodians, insurance when possible, publish periodic attestation for the assets and the reserves, especially if you have a stable coin. Also engage with regulators and use sandboxes. This is something that's very important. That's the reason the sandboxes exist. Use them as a way to test a product, but also get feedback in terms of enforcement of these regulatory requirements. For DeFi exposure, require KYC on and off ramps. Foresight whitelisting for large flows. So if you have, let's say, transactions that are going to be large flows that you know are going to happen, just have the foresight of whitelisting those, doing the appropriate KYCs that are involved or KYBs, and maintaining emergency kill switch capabilities where you control off-chain components. In terms of hurdles, so the decentralized and rapidly evolving nature of crypto complicates regulatory enforcement, as I mentioned. It often outpaces legislative updates, and so this leads to a gap in terms of oversight. So regulation is always trying to catch up instead of being ahead of the curve and kind of having some foresight into what will happen, and trying to have clear regulation of things before they happen rather than after they've been developed, or at least having a notion of what is coming in the market. We have differences in national approaches and legislative philosophies, as I mentioned before. So inconsistent market standards make it difficult for, let's say, a global enforcement, and we do need this harmonization in terms of regulation just to make things clear. That said, we have the same in, let's say, traditional finance, right? We have different systems and different types of requirements. But ideally, when it comes to crypto, we would like to see something that, because it's not country based, the enforcement that does need to happen within, let's say, the legislative part of things can be done in a way that is harmonized across borders. We have the regulation, as I mentioned, of new technologies such as stable coins and DeFi, blockchain interoperability, which is a growing focus, but also a big challenge. And that's why we've tackled this at DeepSafe. Of course, we deal with, the use of um, BTC as collateral for stable coins, but really making sure that any BTC that is used as collateral for stable coins is recoverable through the taproot function, so that the issuer doesn't lose their BTC if there is something that would go wrong with uh, whatever platform they were using in terms of the issuance of the stable coin. In terms of dealing with transparency and risk management, well, we all know really how um, DeepSafe is focused precisely on that, making sure not only that there's transparency, but that all the information is verifiable, not only in terms of transactions, but in terms of oracles, in terms of feeders, in terms of anything that could be used to train AI for its learning, just making sure that the information is verified and that it's real information that won't cause problems later down the line, particularly when you're talking about AI agent training. Another limitation is stakeholder engagement. So it is difficult to address perspectives for all the industry participants. Um, a lot of the time, we see countries where they really want to promote the innovation of these technologies, and they create things, as I mentioned before, like sandboxes. But then when, let's say, a crypto company tries to get a bank account, or when they try to get insured, they face a lot of problems because the insurance companies and the banks have received signals, or from the regulator, just saying be careful, and they fear that if they issue bank accounts or insure crypto companies, that their banking or insurance license might be taken away. So we really need to make sure that not only there is policies for the development of the technology, but that they are able to function in the real world once they move beyond the sandbox, let's say, stage. So the regulatory environment for crypto assets is becoming more coordinated and technologically advanced, but considerable challenges persist in keeping up with innovation, ensuring effective global cooperation, and fostering solutions that do not stifle the sector's potential. And so, with that, uh, I will leave you all. Thank you very much for spending some time with me. We will talk soon again. And I look forward to hearing from you again. Always, if you have any questions, by all means, feel free to reach out through our social media channels or via email. Have a good day, good evening.